Okay, July 23, Thursday. Welcome to the Anderson Report. I am Tim the Source Anderson, and this is the Anderson Report. I think episode 10. We're going to talk about the little market sell off we had today, a couple of other big news headlines, go back and revisit Microsoft and Tesla earnings a little bit, and we let's see and a number of questions. Actually, I really like the questions that came in after last night's broadcast, and from time to time during the day today, and even within the last hour or so. Clearly, the market sell-off has piqued a few people's interest as to whether or not it's just kind of a one-day blip. Are we going to see more of it? How much more downside might there be? Et cetera, et cetera. So the Dow Jones Industrial Average was down 1.3%. It went out at 26,652. It had closed just 5 points above the 27,000 threshold yesterday. It's July 23, month to date. Month to date, the Dow is still up 3.2%. Now, the S&P 500 down about the same amount, 1.2%. Month to date, the S&P, which went out at just over 32.35, is up 4.4%. I just want to put that in perspective for where we stand on the month after today's sell-off. Now, even with that being said, we could sell off tomorrow. We could sell off on Monday. There's a lot of variables in the market right now, and a lot of unresolved variables. Okay, so I think one thing that's interesting to note is that the S&P 500 at 32, 35, 60 is holding what had been the highs from early June by 3 or 4 points. Those highs were right around 32, 33. Okay. Not, just holding it by a little bit, but something to watch tomorrow. Now, the NASDAQ composite took most of the downside. Clearly, it has had most of the upside, not only month to date, but since the March lows and year to date, and probably even for the last couple of years. The NASDAQ down 2.3%. The NASDAQ is plus 4% month to date. The NASDAQ went out at 10,461. Now, on June 13th, when the NASDAQ went down a little over 6%, after the first day that it had ever closed above 10,000, this was also a Thursday. It's interesting that today's sell-off was a Thursday. That big sell-off we had the second week in June was a Thursday. I think the unemployment, the first-time employment claims had something to do with both of those sell-offs. That close for the NASDAQ was 10,390. The NASDAQ closed today at 10,461. It'll be interesting to see if on any further weakness, whether or not that level holds, or below that level, we'd look at 10,200, which the NASDAQ was the intraday low the following day on June 14th, after the big sell-off on the 13th. Now, the interesting thing also about today's sell-off is that really markets were down a little bit, maybe 0.5%, maybe a little bit less, until about between 1 and 115. So we were just kind of like marginally lower. And I would say that 80% of the decline came between we'll say 1 o'clock and 2:30. I think if you tightened it up a little bit, and if I had the chart live right in front of me, it was really probably between a 45-minute and a 1 hour stretch. And I'm sure that some comments after the fact about the employment, the first time unemployment claims started to settle in with a number of people. And also the idea that we were having a couple of serious roadblocks on getting the stimulus 4.0 package um, through Congress. Clearly, this is a big deal. Clearly, there's going to be a lot of gamesmanship and negotiating, to put it lightly, to get some type of a deal through. As I mentioned yesterday, we're going to hear positive headlines on it. We're going to hear negative headlines on it. Today, we saw some negative headlines on it. When push comes to shove, some type of a deal will get done. It's just a question of what it's really going to include and what it's going to not include. One thing that it seems that it's definitely not going to include is a payroll tax cut. Now, that news came out very early this morning, hours before the opening, and the market, I did not really seem to be too impacted by that for the first few hours of the day, because I think that most people who've really been following this knew that that was a very heavy lift, and that the Democrats were very likely to push back hard enough to stop that. So I'm just looking at a couple things in the chat. Hello, Jen. Thank you very much for all your support. Uh, John, notifications. Yeah. Yes, if you are, I think that at this point, probably most people that are watching right now have subscribed to the channel, the YouTube channel, The Anderson Report. If you haven't subscribed, please subscribe if you want notifications on when the next broadcast is going to be. I usually try to schedule them about, I try to decide definitively um, when I'm going to do it. There are certain things in the news cycle that I just don't want to try to compete with. But 7 o'clock seems to be a good time for uh, a lot of people. It's not like right after the close when people still might be traveling or at work, and it's enough time to kind of get a some intelligent thoughts put together on what happened today in the market, rather than just a knee jerk reaction. Uh, so my Twitter handle is TJ Anderson1. You can always ask me questions there. My Periscope is TJ Anderson 12. And obviously, the YouTube channel is The Anderson Report. Please hit the subscribe banner or bar or whatever you want to call it. And if you want notifications on when the next broadcast is going to be, hit that little bell just next to it. Yes, Jim, there was a payroll tax cut, or actually a payroll tax holiday, where payroll taxes were suspended for a period of time. I don't remember if it was 6 months, 9 months, exactly what the time period was. I think it was a little bit less than a year, coming out of the global financial crisis. And Nancy Pelosi spoke very favorably on the impact that a payroll tax cut would have on the U.S. economy. That, of course, was a number of years before she made the infamous comments that a increasing or lengthening the amount of unemployment insurance was the best stimulus package we could and food stamps were the best stimulus package we could possibly provide people. So obviously, with Nancy, everything is 100% political. That's the role she's in. It's just a given. So most of the selling between 1 o'clock and 2:30. Once the market got to where it was, 2:15, 2:30ish, it pretty much waffled sideways for the remainder of the day. Tomorrow will be a very interesting day. Given we've had a number of these sharp sell-offs, this one is certainly not to the extent that we had on June 13th, or even about 10 days later. But it no doubt got a lot of attention from people because it came on the same day that we had disappointing first time jobless claims. And although continuing claims did drop, so there was a little bit of a mixed message in there, maybe that's why there was a delay in most of the selling on the day. Now, there's two other things to mention about today's market before I get into the economic data that we had. And I would like to go back and revisit um, the Microsoft earnings and the stock reaction that we had today, and the Tesla earnings and the reaction that we had there. Very fascinating. Now, the Nasdaq down 2.3%, the Dow and the S&P down 1.2%. The Russell 2000, I'm sure many people are tired of hearing about it. The Russell 2000 flat almost to the penny on the day, zeros across the board. Still up 3.4% month to date. This was not today's action, I would call a little bit of a mild market markdown. And that markdown happened between 1 p.m. and 2:30 p.m. It was not a beatdown. A market beatdown would be if we had opened down a half of 1%, continually went down from there, closed down 3.5, 4%. Every rally was sold, and the intraday chart on the page just was a diagonal line from the upper left to the lower right. That would be a beatdown. Today, what we had really was a markdown where prices went down sharply for 45 minutes to an hour. They were already down a little bit, and from 2:30 on, they pretty much went sideways. Now, consistent with the Russell, outperforming with an unchanged move on the day, the advanced declines were slightly less than even. They were negative by about 140 issues. That's not bad for the decline that we had in the market averages. The only caveat I will say is that when you get a sharp sell off during the afternoon, after a market that's was down a little bit, but a little bit less than unchanged, sometimes the reaction in the broad market will lag by a day. So I think tomorrow's advanced decline numbers and breadth numbers are critical, um, regardless of what the market does, to see if the broad market holds up again today, if tomorrow, if we have any further weakness. Even on NASDAQ, which was down 2.3%, with some selling in some of those mega cap growth names, the NASDAQ composite declines led advancers by about 2,000 to 1,300. That's just slightly more than 3 to 2. Again, it was not a market rout. It was a markdown among the stocks that have been market leaders, some of the big blue chip stocks and the big market averages, the high cap stocks, down a little bit. Oil was holding up most of the day, sold off during the afternoon. Crude oil down 2%. And just to clarify, that's what some people would call West Texas Intermediate. Brent crude is trading maybe $2 to $3 higher than that. But crude oil, as most people would quote it, went out at $41.11. That's West Texas Intermediate if you're an oil person. Brent crude, which is the oil that comes from the Middle East, was about 43 and a half. That spread of $2.50 is a little bit less than it can be. It can be as much as $6 to $8. But again, oil holding 41, holding 40. The energy sector was down a touch today, but it wasn't one of the leading decliners. The leading decliners among the sectors in the market were infotech, that's and consumer services, both down. Consumer communication services down 1.9%, infotech down 2.3%. Those are the companies driving your big internet traffic trade. I don't have the numbers for the semiconductors specifically, but Advanced Micro yesterday uh, traded at an all-time high. It was up 8%. If the market's weak again tomorrow, I want to watch how the semiconductor stocks act. Okay, now um, let's go back and take a little bit of a look at. Uh, I mentioned continuing claims last week. Continuing the first time initial jobless claim filings were 1.3 million. That was just a small, very small fractional decline from 1.31 million, which would be only a 10,000 decline from the prior week. Okay. This week, first time claims 1.4 million. So that's an uptick. That breaks the 15 or 16 or 17 week streak. I can't remember how long it was. But off the very first spike, astronomical spike higher, this is the first time we've had an increase. I've been a little bit concerned about it. I'd be concerned about it again this week with the fact that a lot of businesses have halted their plans to accelerate their reopening, or a lot of businesses, particularly, I think, some restaurants, maybe some retailers, anything involving indoor activities in a lot of states that have had a big spike in cases. There's a stall there, and it's added to some people filing again, maybe who might have filed at one point in time in March or April and then come off and now filed again. Because there's a little bit of a dichotomy where that number was up 100,000, 1.4 million from 1.3. Continuing claims, which I believe is a 4-week rolling average, were down to 16.2 million from 17.1 million. Now, that number is still way too high, but the continuing claims number, people who've been constantly filing week after week after week after week, at 16.2, down from 17.1, is somewhat of a positive. That means that there of a lot of people that have been filing for the last 3 or 4 weeks. Some of them dropped off those unemployment rolls in the last week, or the rolling average was enough to where that rolling average decreased of the total from 17.1 to 16.2. I'm not going to get into the intricate details of it beyond that. I think it's a 4-week, it might be a 6-week rolling average. And I just get the impression that if there were some people that filed in mid to late March, went back to work, let's say mid to late June, and then with this spike in cases, worked for 3 or 4 weeks, and then with this spike in cases got laid off again, they might be first time filers, even though they had been first time filers back in June. I'm not sure of what the actual threshold is on whether or not they could be a first time filer a second time if they had worked for, like, say, 4 to 6 weeks and then got laid off again. I'm just not sure. But I get the impression the way that number increased and continuing claims has decreased that might be the case. I have to go to a couple people that are a little bit more intricately knowledgeable on this and get some feedback from them on that. So we had 2 big earnings last night. We spoke about them a little bit last night. Let's talk about Microsoft first. Microsoft came out. They reported good numbers. They beat quite a bit on revenues. They had 38 billion in revenues versus 36.5. Their earnings per share beat. And even and everybody wants to look at Microsoft's cloud numbers. And even where their cloud numbers were very strong, they came in with growth in their cloud division of either 46 or 48%. Okay. And the exact number doesn't really matter because this is the first time for a few quarters that their growth was below 50%. Now, that is a monstrous number, but keep in mind that Microsoft is getting into the game a number of years after Apple made its big splash in it, and they've been quite successful at it. But this speaks to how, and I just want to spend a couple of minutes on this. This speaks to how momentum investors behave in the market. Okay, there are momentum investors that follow fundamentals, follow technicals, follow a combination. But what they really want to see is they want to see continuing acceleration of growth in revenues or revenues of the key driver of the business for the future. And these people consider cloud to be a key driver of the business for the future. So, momentum investors want to see that growth continuing to accelerate, even though at better than 50%, it's a level that realistically just can't be maintained. So, that's kind of called, it's not just, it's not just, are you growing earnings? It's, is the growth rate still accelerating? Okay, that's called like the second derivative. Now, if Microsoft had been running, and I don't know what the specifics are, if they've been running growth in their cloud space 52, 55, 58% for the last few quarters, and now they come in below 50 for the first time in 3 or 4 quarters, I don't know how long it's been. Some people are going to say, uh-oh, their growth is slowing. The rate of their growth is slowing. Their growth isn't declining, but the rate of their growth is slowing. uh, I'm out of here. Okay. So, look, Microsoft has had a huge run. I mean, it was down 4%, 4.3% today. Big deal. All right. It had closed at 211 spot 75, $211.75 yesterday. Its second highest close ever. The highest close was on July 9 at 214, $214. It closed today at 202.50. So it was down 4.3%. It's still uh, way above where it was the beginning of the year, the March lows. I mean, forget about it. The I thought I had those numbers written down, but I don't. But anyway, the 50-day moving average for Microsoft is 195. If it were to continue to sell off, that's $20 lower. That would be a level to look at. It's actually $7 lower. I take it back. It went out at 202.50. The 200-day moving average is at 170. So you can see how much Microsoft has rallied really hard off where it was not just the beginning of the year, but the March lows. When you've got a 50-day moving average that's $25 above its 200-day moving average, that means the stock has been a rocket ship for a good portion of the last 3 months. So, look, the growth in their cloud slowing a little bit. It's still growing over 45%. It's very possible some analysts are going to comment on it the next few days, and they're going to say, "Look, okay, it's everything's still good here. There's still going to be an integral part of technology playing a much more significant part of the economy, if that's even possible, throughout the end of the year and into next year." Da 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 da. I just think that on any further weakness, and again, I have to be careful about how I talk about individual stocks. I'm not a registered stock analyst, although I'm a registered person in the securities business. I'm not recommending that you buy Microsoft or that you sell it or that you don't sell it if you already hold it. I'm just commenting on how big institutional investors look at their earnings report. And I would not be surprised if some of the analysts who have been fans of the stock and in favor of the stock and have buy ratings on the stock come out and reiterate their buy recommendations over the next week or two if there's continued weakness in the stock. But we'll see. We'll see how it acts if it gets near its 50-day moving average of 195. Now, let's talk about Tesla. Okay. So, Tesla reported their earnings last night. They were profitable. It was the fourth consecutive quarter that they were profitable, which technically would qualify them to be for entrance or to be added to the S&P 500. Okay. S&P has not said that yet. Part of the sell-off today might have been people with just unrealistic expectations as to how soon S&P might make that announcement. I'm sure that they have a review committee that meets periodically, and I don't think they take decisions like this lightly. So I'm not surprised at all that there was not a statement by S&P that they are adding Tesla to the S&P 500. I am not 100% convinced that they are going to after this earnings statement, but I would say that it's more likely than not. What would the timing of it be? We just don't know. Now, so the stock initially rallied in the after hours yesterday. Maybe it was up $50 or so. I think it was maybe up 3 or 4% early this morning before the market really opened. By the end of the day, the stock was down 5%. Okay. Now let's just put in perspective what Tesla has done, not just this year, but we'll talk about it, what it's done since June 29th. On June 29th, Tesla closed. So Tesla closed today at $1,513, $1,513. Okay. Just over $1,500 a share. On June 29th, Tesla closed at $1,009. Okay. 4 trading days later, on July 7th, there was a 4th of July holiday in there. 4 trading days later, Tesla had rallied 37% to $1,371. All right. That's an unbelievable move. Now, consider the fact that near the March lows on March 18th, very close to what we have called the Ackman lows, Tesla closed at $361. On April 30th, Tesla had more than doubled over 5 weeks to $782. Then from April 30th, almost March 1st, to June 29th, 2 months later, Tesla went from $782 to $1,009. So Tesla almost tripled from its lows in March to June 29th. That took it to 1,009, and today Tesla closed at $1,513 a share. Now, let's go back and look at their earnings just for a minute. And I am not a registered stock analyst. I'm not even a registered accountant. But what a number of people were talking about today in their earnings report was that one of the reasons that they made $2.13 a share, a lot of people were expecting them to make or lose 20. I wouldn't even say that there were estimates for them to make or lose 20 or 30 cents. But the estimates were so all over the board, from them losing $3 or $4 to making $8, that the average was pretty much that they were going to break even. Although I think that the fact that the averages were so crazy The range of estimates were so wild that to say what the consensus was is almost meaningless. So Tesla is obviously an electronic car company, and one of their big drivers of earnings in the last quarter was what they sold, what they call cafe credits. Okay, cafe are the mileage standards that automobile companies have to make to uh, not get fined by a regulator or shut down in a state or whatever the specifics are. But there's a mechanism through which Tesla, because it has very, very, very high mileage measured on miles per gallon of gasoline, their electronic cars, they get to sell their credits because they beat that standard by so much. So my question would be, and maybe S&P's question is Tesla selling cafe credits a continuing item? Is it a part of their regular business model? Maybe it is for Tesla since they're an electronic car company. Or is it part of their continuing operations? Or is it what they would call an extraordinary item? We noted last night that Tesla's earnings of plus $2.13 said adjusted. I'm still not sure exactly what that was adjusted for. There were some unconfirmed reports that they had not paid some rent payments in the second quarter. I don't know if that was a dispute with the state of California or what it involved. I'm not going to speculate on it. I don't even know if it's absolutely true, but I heard more than one person on the financial news who I respect as a commentator talking about it a little bit. So I'm not sure what their adjusted earnings came from, but I think that Tesla down 5% today from last night's close. S&P didn't make an immediate statement that they're going into the S&P 500. Sometimes the market gets very spoiled. And sometimes the market just has unrealistic expectations on when things that are supposed to happen, whether or not they happen when people think they're going to happen. But let's also put in perspective that on July 13th, is that right? There was a day when Tesla had a wild ride on the day. I think it was actually June 3rd, maybe July 13th. It was the day when the NASDAQ had a huge intraday correction. Tesla traded as high as 1,800 and closed at about 1,500. So on that day, Tesla had a 16% reversal off its highs of the day. Held that, closed at 1497, held that, traded up a little bit, scratched 1600 again, maybe got a little bit higher than that. Had a big down day today. Some people would call it a reversal if you wanted to look at where it traded pre-opening. Look, Tesla's had a monstrous move. It was just below $800 in March 30th, May, June, July. Almost 3 months later, it's almost a double at 1,513. That's a double in 90 days. After doubling from March 18th to April 30th, they're announced that they're going to build their second plant in outside of Austin, Texas. I'm sure that they are going to very likely raise some capital to build that plant. They could sell debt. They could maybe do a stock secondary. If I were a big investment bank advising Elon Musk, I don't know how he takes advice, but for a stock that doubled from late March to late April and then doubled again from late April to now, almost 90 days later, uh, it would certainly make sense for him to do a secondary stock offering. The market's always absorbed his stock very well in the past. It'll just, I don't know that they have the free cash flow to just build this plant without uh, doing some type of a capital raise. But it's a great market example of a sell on the new, both Tesla and Microsoft for different reasons. And the reason I want to talk about them again tonight, even though we talked about them last night, both of them are great market examples of a sell on the news or sell on the event, waiting for the really, really good news, getting it, and then seeing people sell the stock on that event. Okay? So, look, the big event would be if they're added to the S&P 500, how they would handle that. Um, I would just say that if they were considering a stock offering and if they got added to the S&P 500 sometime over the next 30 days, it would make a lot of sense for them to do that secondary stock offering on the day that they're being added to the S&P 500, because that's the day when the market is going to have tremendous demand for the stock. So that's just one thing to look at going forward. I mean, it'll be interesting to see. Excuse me. It'll be interesting to see if we have any further market weakness after today's little blip. It'll be interesting to see if the broad market holds up like it did today. I'd certainly watch the 3,200, anywhere from the 3,200 level to where we are now on the S&P. The old June highs were 32, 33. I'd certainly watch the 10,200 level on the NASDAQ. And if we got lower than that, the 10,000 level, we could test 10,000 again. It's for NASDAQ, for a NASDAQ that's up 18% year to date, for it to test 10,000, 4% lower from here. It's up 4% month to date. It wouldn't absolutely shock me. And again, is the Russell 2000 going to hold up, and are we going to see more money continue to go into the small cap space as it potentially rotates out of these big mega cap growth technology names? That's pretty much all I've got tonight. I really appreciate everybody watching. I love the comments. I love the questions during the day. My Twitter account's TJ Anderson1. This is the Anderson Report on YouTube. That's my YouTube channel. I am Tim the Source Anderson. My Periscope is TJ Anderson 12. I probably will not do a show tomorrow, unless we get maybe some deal, some stimulus 4.0 type deal. Maybe I do something quick at 5 o'clock. We'll see. Ideally, I'd do a market week recap on Saturday. I think we've got the structural issues we had in the studio fixed. But everyone have a great night, and we will talk to you shortly.